Hello and welcome to MasterChartsTrading.com market recap for the weekend in Friday, May 15th, 2015. This week, S&P 500 hit an all-time closing high and is just a few points away from a new all-time highs as well. There are some mild divergences in the S&P 500 which remain. I'll show what I mean by that. Bonds surged on Friday and they triggered a buy signal. Bonds are still bullish. And some interest rate sensitive stocks and sectors rebounded as well. And we'll look over utilities and real estate. And weakness in the dollar is helping gold and some other commodities as well. All right, let's look at the S&P 500. Okay, so first let's look at the actual chart. This is a candlestick chart of the S&P 500 large cap index. It's a bullish chart. Prices are obviously moving from the lower left to the upper right. And right here, today, actually on Friday, we hit an all-time closing high at 21.22. And we're just a few points away from a all-time high as well. So this is bullish looking chart, and we may pull back a little bit and possibly continue higher. As far as market breadth, and I mentioned that there is some divergences that are remaining in the S&P 500. So this is advanced decline line, and you can see here that it did hit an all-time high here in February, but it is yet to hit a all-time high right here in May. So you can see it's 2993 here, but it's 2999 here. Now this is a very mild divergence, and I'm not sure what it means, but other sectors have already hit all-time highs. So the QQQ, the NASDAQ 100 ETF, and the IWM also hit the AD lines for those sectors have hit all-time highs, but the S&P 500 itself has not yet done that. The same is for on-balance volume, an indicator which is quite useful, I think. Still not, it has not hit an all-time high either. So there is a divergence going on here underneath the surface. Once again, I don't know exactly how much should I worry about this, but it is definitely there. As far as the market breadth momentum oscillators, they are not, I'm not very ecstatic about the way they are looking right now, but they are still in a positive territory, and looks like we are probably going to continue higher. And the new highs, new lows, it's in a positive territory, and it's about 5%, so there's definitely more highs than new lows. I mean, last time we saw some significant selling pressure was back in December, right here. You can see a little bit of selling pressure right here. Other than that, I see not a significant selling pressure yet. There's lots of buying pressure, but very little selling pressure in the S&P 500. Okay, let's move on to bonds. So TLT is kind of like a nice proxy for the bond market as a whole. It's definitely more volatile than the rest of the bond market. And so here in late January, TLT hit an all-time high, and since then it kind of sold off in waves. The support was broken right here. You can see a clear gap down. Our sell signal, I'll show in the next chart, our sell signal happened around here in mid-April. So since then, we basically completely stayed out of the bond market and just watched what was happening. here you can see that TLT attempted to rally, but it did not hold, and it gapped down and continued lower in May 11th. But here on Friday, actually today, you can see there was a really big gap up, and then the price continued higher. You can see a gap up, and then price continued higher, and it closed near the day's highs. So this to me shows like there is interest in buying bonds and pretty significant buying pressure. I mean, it gained 2% for the day, so that's pretty good. As far as unbalanced volume, there's no divergence. It was making lower, it was moving lower, so unbalanced volume was moving lower as well. But long term, TLT and bonds in general are still bullish. So I was looking for a re-entry opportunity, and today this surge did provide with exactly that. And here's the next chart. This is a TLT 20-year, same thing. And this is the market timing chart we use here at MasterChartsTrading.com. So right here today was the actually a buy signal for us, and we went ahead and opened a position in TLT. Bonds are still bullish long term, and until proven otherwise, I will be looking for a bullish setups. So this sell-off right here, we basically ignored it, and we're looking for a bullish setup, and this is today was a good, to me, looking good entry opportunity. So interest rate sensitive stocks and sectors also were pretty strong selling pressure as well. And the next chart I'll show XLU, the utility sector. You can see that they were, even earlier than the bond sell-off, they were already selling off. So I guess XLU was kind of like a leading indicator for the upcoming bond sell-off. And since then we had a next chart I'll show. We had our buy signal back on March 12th, around here, but basically it went nowhere. It just kind of meandered here, and even I think it broke support here, but it rallied right back up. So today on Friday, XLU finished with a nice gain of 1.3%, and I think if bonds will continue to hold their own or possibly rebound, XLU will definitely continue with it. It's an interest rate sensitive sector, but it is a stock sector nevertheless. So it's more correlated higher with the general market than with bonds themselves. So I think XLU, if the general market continues higher and the bonds rebound, will benefit as well. And you can see that there is a market breadth data for XLU, and looks like the market breadth is on the upswing right now. All right, so next chart shows the market timing indicator, market timing chart that we use here, and the latest buy signal was back on March 12th, like I said, but it was really not a sell signal truly yet. Next chart shows real estate iShares IYR. Similarly speaking as XLU, it's a interest rate sensitive sector, and you can see it kind of similar to TLT. It's sold off pretty sharply, rebounded, and sold off again. Here in the around the 200-day moving average, it looks like it found support and rebounded. So same thing as the XLU. Next chart shows a buy signal back on May 8th, actually, a lot earlier. And we went ahead and opened the position here as well. I just forgot to mention it in the actual recap last time. All right. Next is let's look at the dollar itself. So UUP, dollar index bullish fund. So, you know, it had a pretty stellar run. It was up, I forgot how much, but quite a bit, quite many percent here, and then it corrected about 8%, 7.5%, 8% here from the top in March. So it's still a bullish security. You can see the prices are still moving from the lower left to upper right, and the 50-day moving average is above the 200, and the price is above the 200-day moving average. So, you know, the traders are still looking for a bullish setup for this trade. Now, you can see that there were several breakdowns. First here, this support did not hold. There was a rebound, another gap down, the support did not hold again, and yet and then another gap down, this support also did not hold just this week. Now, this today's action is not particularly bullish. I want to see something like a hammer candlestick with a large tail at the bottom, and then prices push back up. Hasn't happened yet, so possibly we may retest the 200-day moving average. And then possibly rebound, or you know, it just depends of where the world events will lead us. But you know, the dollar itself once again is long-term bullish, and you can see by MACD it's in a negative territory. It's very oversold, so a crossover here would be like a sign of almost, you know, like a sign of a bottom basically. So far, next chart shows our market timing model, and this is same chart, same security UUP, but so far we had no buy signal just yet. We had a sell signal back on April 27th right there, but so far I don't see a buy signal just yet. Okay, next on agenda is gold, and of course, sell-off in the dollar contributed to some strength in gold, and you can see that gold, you know, kind of moved down, but it rebounded pretty strongly right there, and it's possible. This is possible breakout right there, uh, and we may see some more upside, especially if the dollar continues to slide. So the price did manage to close above the 200-day moving average, and that's a very positive sign if you're a gold bull. At this point, I'm still bearish on the security, and I will be looking for a bearish setup as well. You can see the same thing happened here. The price closed above the 200-day moving average, moved up a little bit more, and then rolled over into a very nice decline. Now, this time potentially may be somewhat different than last time, than this time. And the next chart, I'll show what I mean by that. The gold miners may be acting better and stronger than during this run-up. Okay, so okay, one more thing is a GLD. This is a market timing chart, and we were basically, this shows a short cover that needs, you know, we covered the short here. We didn't have a GLD short open, we had a GDX short open, but it's a similar pattern, and the short was covered here, rather would be covered here. Okay, so next chart shows GDX market timing, GDX market vectors gold miners ETF. So this run up right here from beginning of January, you can see that the SCTR stock chart technical rank kind of peaked out here at around 75 or so, and didn't really go further. Here you can see it's different. You can see it's stronger. It's actually in the 90s and in the 80s. So this shows that there is some good relative strength in the gold miners ETF GDX. Long term, once again, I'm still bearish on GDX, but you know, there's no arguing that the price first of all, it failed to continue down. This breakdown right here, I thought that okay, this is a breakdown, and it held support at the 50-day moving average, and then rebounded pretty strongly. This is a RAF channel, RAF regression channel, so you can see that it shows kind of like a price moving up in a channel, and this also could be a fallen wedge. So this is a bearish security, and the fallen wedge in a bearish security after a breakdown would mean that the prices would continue lower. However, the rising wedge rising wedge itself is bullish until prices no longer are rising. So at this point, we did cover the short with a small loss, and we'll be looking for a re-entry opportunity on the short side. But there's a possibility that there is now quite a bit of strength in the gold miners market. And the next chart I'll show Newmont Mining. So one of the large cap gold miners that are present in GDX, and this is also present in S&P 500, part of the S&P 500. So look at this stock chart technical rank. It's now amongst market leaders like biotech and the Chinese stocks. It's at 99 today, so that's very strong. So one of the top performance stocks, really. And in other words, what I'm trying to say is this is part of the GDX, and if we're short in GDX, we will also be short in Newmont Mining. So there needs to be some sort of a strong downward push by gold itself for me to continue shorting GDX. I mean, I'm not short right now, but I will be looking for short setups. What I'm trying to say is it's possible that gold and gold miners are kind of maybe at an inflection point, and we'll see where it goes from here. But it's possible that gold is finally bottoming out. We'll see. Anyways, back to Newmont Mining. This is definitely now one of the market leaders, and if this if SCTR continues to be in the top 90%, then once it pulls back, I will be looking for a re-entry opportunity. Okay, next chart shows Newmont Mining with our buy signal back in on March 20th. It became bullish somewhere around here. I meant bullish long term. So at this point, this pullback to me was a buying opportunity, and I didn't take that particular signal myself, but this is a nice example of how it's more beneficial to buy the dips in a bullish security versus trying to pick tops or bottoms. So once again, once the Newmont Mining retests possibly the 20-day moving average, or maybe even that pulls back to the 50, then I'll be looking for a re-entry opportunity in Newmont. All right, and finally, since dollar has been on a tear, dollar has been under pressure lately, you can see that oil rebounded pretty strongly from the bottom in March and to the top here in May. This is United States Oil Fund. This is almost a 40% rise, so it's a very strong rebound. And for the past few weeks, it's basically been just kind of consolidating in a range here. It hasn't been able to break down conclusively, but it also hasn't been able to break out conclusively either. So I'm still long-term bearish. You can see it's a very strongly bearish security. SCTR is 1.2, and the 50-day moving average is below the 200, so definitely a bearish security. So I'm looking for a bearish setup, but it hasn't happened yet. And the next chart is showing same chart, USO. So far there was a cover the short signal here on April 6th, but so far there was no re-entry to the short side signal just yet. All right, that's it for this week. Please do visit us online at MasterChartsTrading.com and sign up for our mailing list. Subscribe our mailing list. Soon we'll be opening a trade alert service, and if you sign up for our mailing list, you'll be first in line to get the promotional pricing. Also, if you have a chance, go to public charts and social link right there, and there you'll find the links to the public charts page, and also if you have any of the social media accounts, we are there as well. That's it for this week's recap. Thanks for watching and have another great trading week. Bye-bye.